about making the most of your homeowner insurance policy. So, you're probably here for one of three reasons. Either number one, you're getting homeowner insurance for the first time, you're getting your renewal and considering helping yourself understand more, or number three, maybe you're at seasons of the year, such as the beginning of school year or the beginning of the year, and you're just trying to make sure that your finances are in the best possible situation. And I think for all those situations, I every day do tens in every month, do hundreds of reviews of people's policies to make sure that they're being taken care of and that they're being maximized. And what my goal is that when you go into your next shopping experience, you have the opportunity to be empowered with a few things to make sure that you're saving money and getting the best coverage possible. So real quick, my background is I am a insurance agent, and I also in the past have been a lender. So a lot of this experience comes from both having to get things to the closing table for lending and now having conversations constantly with new clients and with existing clients to make sure that they're in the best position possible. So I'm excited here to share some of those secrets. So let's get right into it. So I'm going to cover three areas. The first one is let's just make sure we know what the different types of insurance for homeowners or slightly kind of not homeowners are. First is renters. So a lot of times renters policies where a lot of new people start and they think that this is a great policy to cover some of the contents and get a little bit of liability coverage, but we're not really going to spend a lot of time on that. The two policies that are really important that I think you should understand are condo policies and then also policies for traditional homes. So condo policies, what's interesting about a condo is that you're only covering what's inside the walls. So the policy is typically less because of the fact that you're not having to cover the outside, which is sometimes is covered by the HOA. And then finally, you don't own the land. But with either a townhome or a traditional home, you're going to have a more extensive policy that covers the outside of the home, the inside of the home, and then also other parts of the property. So next thing we want to really get into are premium. The three big things you're going to be talking about are premiums, your deductibles, and then also the way things are valued, especially the roof. That's the most sensitive for people. So we're just doing basic concepts here. So premiums. Premiums is what you pay every year for that policy. So a lot of people will be like, what's your rate if you're in lending or something like that. So the cool term is your premium that you're paying every year. So if you own the home, a lot of times you can pay that monthly. But if you bought a home and you have a mortgage on it, then that typically is paid for. It's called escrow. So your mortgage company will pay that for you 1/12 every month. A lot of times, unfortunately, what you'll see is what's called an escrow holdback, meaning that costs have gone up and then they ask more money. But basically, the mortgage company is the one that's responsible for paying directly to the insurance company for that initial premium every year. Okay, so let's talk about deductibles. So there's typically two deductibles you're going to see. The one that is it's called all other perils. So pretty much anything that happens to your house, like a fire, that's typically one of the biggest ones we see. Um, that's covered in a separate deductible here in Colorado, which is typically less, sometimes between 1,000 and 2,500. You can make that higher if you want, but typically that's where it's kept. So if anything happens, you'll get paid out all of the claim except that little component of the deductible. For in Colorado especially, we have many thunderstorms and hailstorms that make a big impact and have to constantly be replaced. So with wind hail, what now we do is take a percentage of the rebuild estimate for your house, and then that is what you basically get an estimate for the repairs, and then you receive reimbursement for that minus the deductible. So for the rebuild estimate, I don't really want to go super deep into it because it's really boring a lot of times. But so let's say you have a $400,000 piece of property and you have a house on it. So typically that rebuild estimate is going to be a little bit less than the 400,000 because that also includes the land value, and you don't need to include that in your rebuild estimate because you're not rebuilding the land. But let's say that's around 350. So 350,000. So what that would do is basically you would be at if you are at a 1% deductible, which is typically the minimum you'll see on different policies now, you would be responsible for deductible of 3,500 is what that would come out to. you can actually elect to go all the way up to sometimes 5, sometimes 10% as a deductible, and that has an impact on price. So that's why it's really smart to understand a little bit. If you have more questions about that math, please put a comment in the bottom, and I'd love to explain that to you. But I don't want to take tons of time on that. So the last thing I want to do is one of the sneaky things a lot of people try to do that try to cut on price is what ends up happening is that there's different ways to value things. So there's two typical ways that we have in the insurance industry. The first one is what's called replacement cost. That is typically the more expensive option, but it's very straightforward. You get the receipts, you get it accepted upon by our claims department to make sure that they like the estimate. We ask for like typically what's an itemized estimate, so it typically tells you all the different things. And then basically straightforward, replacing whatever was broken minus the deductible, and that's what you pay. A lot of times when you're in a competitive situation though, when insurance agents are looking to cut, what they'll do is they will change the valuation method to what's called actual cost value. So there's these really boring tables that different companies or the IRS has made to devalue property over time because it gets worn. A lot of people use the analogy of a car. A car that was made in 2002 does not have the same value when it's been driven as it does in 2024 with all those miles on it. So especially with roofs that are over 10 years old, what we see is that they go to this actual cash value, or we do actual cash value or what's called scheduled payment, because the payment is on a schedule, which is what a depreciation schedule is cost. And basically what that does is instead of, let's say you get an estimate for your roof, 20,000, if your roof has been depreciated and the value will only reimburse is 60%, 20,000, basically you lose all that value that we will not reimburse based on whatever has already been depreciated, and you still have to pay your deductibles. So I get a lot of clients that sometimes are like, why am I paying so much for my roof if I'm going to have insurance? And I have to explain, I'm like, hey, well, unfortunately, this is the way that we can cover it. And this is not the only peril that you're trying to replace for. So a lot of times we have to have these strategic conversations about how do we budget for a roof if it is a little bit older. And if you're in that 7 to 8 year category for a roof that's in that 8, just I would really recommend you drop something in the comments so that way we can have a conversation. And I'm not a guy that likes to go claim happy, and I also understand there's a big difference in terms of your coverage if something happens for if there's a certain valuation method. So I just always like giving people options, understanding how it impacts their lives, because $10,000 to $15,000 impacts people a lot of times. Okay, so last big thing I want to cover is I promised that I was going to get you information that you can look at the next time you have to do a homeowner insurance purchase or renewal. And there's going to be 3 things I want you to look at. So the first thing you need to be looking at is the premium. Look how much it costs. That's still the first thing that you need to consider. That is going to be in your budget. And a lot of times, the nice thing is it'll be paid for by the mortgage company, so you won't feel it out of pocket, but you definitely will feel in your mortgage payment every month. Next thing you need to understand is make sure that you understand the deductible amounts. Anywhere for the all other perils, anywhere between 1,000 to 2,500, you can increase it more if you want to, but that's typically what I would be expecting to see. But the real kicker is if there's any way for your insurance professional that you trust, and I would love to earn that trust. If you would like me to get you an evaluation, I like doing policy reviews and helping people in that process. So I'm always here to help you with that here in the state of Colorado. And then what I'm seeing is that with the deductible, I would suggest looking at different options for a 1, 1.5, and 2% wind hail deductible, because there could be a difference of 20 to 30% in the premium, which could be a big difference in your budget. So I would just really suggest taking the time to do a little bit of comparison. And I always do that. It's nice because in my shopper, I have the ability to show those different options. And just give yourselves a quick think, an option to think, because it's nobody really wakes up in the morning and says, oh my gosh, I'm so excited to buy insurance. But then all of us, whenever something happens, it's really important that we did it right. And then finally, just getting smart real quick and just looking for the one line in your presentation or asking your insurance professional, hey, how are you valuing my roof? Are you doing it under scheduled payment or actual cash value? Or if it's scheduled, if it's replacement cost, great. Just make sure you understand that. And especially if maybe you said you have a newer one, then having whichever option, which probably is the actual cash value, which is less expensive because the risk of you actually having to replace that is lower, then do that. But especially if you're in that 6 to 10 year mark for your roof and you're worried about that, which I have a lot of clients that are, that's where I would definitely want to make sure that I'm getting those things valued appropriately. Sweet. Well, I really appreciate watching to the end of this presentation. I'm excited to help you any way I can in the future. I'm going to keep making more YouTube videos about different things in different areas of insurance. So please, if you have any suggestions, please put it in the comments. And if you want me to look at your policy, or if you want me to help you in your next home purchase with helping on the insurance side, I'd be honored. So feel free to like my pages and or comment, and let's get that conversation going for you. And I hope you have a great day and best wishes to you and your family.